All right, natural gas triggers a breakdown from a small rising channel, indicating likely lower prices. But before we go further, a quick word from our sponsor. This video is brought to you by XNES, the world's largest retail broker, offering ultra-fast execution with no overnight fees. Find a link in the description below. This is Bruce for FXEmpire taking a look at the daily chart for natural gas. So you can see it broke down to a 4-day low of 432 and still falling. That triggered a breakdown of the red 10 period simple moving average and a breakdown from this 150% extension of this original channel here and this trend line on the small rising parallel channel. So this puts natural gas in a position to likely test support around the purple 20 moving average at 403 before the correction is done. At least that's the next key potential support zone, along with the 38.2% retracement at $4. So $4 to 403 basically is the current support zone, but the 20 moving average continues to rise. So initially we have the support potential here at 415. Resistance becomes possible support. That's also at the lower end of this rising parallel channel. But since we had quite an aggressive rally here, I think that the correction may last a little bit longer than that. If the 20 fails as support, then we're looking at a retracement down to the 50% zone at 379. In worst case, the 200 moving average down here at 350 currently and rising slightly. And soon it will start to get closer to the 61% retrace, 61.8% Fibonacci retracement at 358. Also a potential support zone. Nevertheless, the bears are now in charge and they're likely to stay in charge for a little bit. And you can see the relative strength index has also turned down after being overbought. Actually, the most overbought since back here in October of last year. All right, that is it for natural gas traders. Have a great week.